Hello traders and welcome to another video review. Today is Monday, November 4th, 2024. Let's find out what's going on the economic calendar for today. As you can see, Asian session was a non-event. Nevertheless, the full amount of the data will be released during the London session. We got the PMI indicators from all over the Eurozone scheduled for release since 9:15, and we got the PMI from Spain, from France, from Italy, from Germany, of course, and the main one from the Eurozone. This one is scheduled for release at 10 o'clock, and the Eurogroup meeting will start at the 11 o'clock. At the same time, German President Nagel will give a speech as well. During the US session, we got the ECB Alderson speech at 2:30. Then we got the factory orders from the US at 4 o'clock. At 4:30, we got the ECB McCall speech. Then at 5:45, we got the German Balz to give a speech. At 7 o'clock, as usual, fear note auction. And at the end of the day, at 11 o'clock, Reserve Bank of New Zealand Governor Orr will give a speech. So plenty of speeches today. A lot of the data scheduled for release from the Eurozone in form of the manufacturing PMI data. Otherwise, quite easy, quite calm day in terms of the data releases. All right, that's it. That's about it for the economic calendar. Let's find out what's going on charts. We start with the euro dollar. Euro dollar for our chart is again looking quite bullish because we opened up with a gap between the level of 1.0846, 1.0861, so it's like 15 pips gap to the upside. The bulls tested the level of 1.0906 already, so this zone here, as you can see, right, the zone between 1.0893, 1.0910 is again being very crowded. The bulls and the bears are fighting for this zone to break to the upside. If the bulls will win and break to the upside, the next target is located at 1.0951. That part of the downtrend, okay, so we got the downtrend on the left, and this part of the downtrend is definitely a different cycle. It's an attempt to rally higher made by the bulls. So it looks like the first leg of the overall upside correction. Momentum is quite strong, it's quite positive, 62 points, not too bad for this situation. And most of the market participants will await the PMI data from the Eurozone, so this PMI might trigger even bigger volatility on the euro dollar. So please stay tuned, as this is just in a few hours. So that's the outlook for the euro dollar. We continue the uptrend. What is another major doing? This time we are looking at the cable. So we can see that again the cable has done the new local low. Let me just extend this. This channel. If I will try to do it that way, for example, there you go. So we have a couple of false breakouts, so maybe there were signaling actually that there was some kind of attempts to rally, but all of them just failed, basically failed, and the market keeps moving lower, keeps making lower lows. If we even extend this channel to this newest data, so we are looking at this swing here, and we still, as you can see, have the bearish divergence, which is still not being resolved, absolutely not being resolved. And this is the bearish the arrow from the momentum. Momentum hit the level of 50 and then 30 bounced above the level of 50 again, as the new low was made way below the level of 1.3 at 1.2843. Then we have the bounce to the upside, and then again we got the 100 periods moving average that is acting as a dynamic resistance and prevents the bulls from rally. So this is again the major level right now, major thing for the for all of the market participants. Let me just mark the low. There you go. And a very nice reversal here, as if you can take a look at this part of the chart. Very nice reversal here. It might look like the beginning of the bigger movement to the upside. Already this movement is strong. Already this movement looks quite interesting. So please take a look at the lower time frame charts to see whether there are some chances for the rally above 1.3 level, and then 1.321. Apparently this level should be moved a little bit higher because the newest data are here. So it's a 1.3242 and then 1.3070, 1.31. So that's the situation for the British pound. We are trending down because the market doesn't want to resolve the positive divergence. The momentum remains negative or barely positive. So if there is no decisive breakout, big nice movement to the upside, breaking the levels of the technical resistance, we might see again false breakout, false movement to the upside, and then reversal lower. US dollar versus the Japanese yen is finally moving even lower than we actually thought. The new low was made at the level of 151.61, and now it's a minus 1.48. The overall correction has, and it's quite let's say quite time consuming compared to all of this small downside correction during this very nice impressive upward cycle. So we got definitely something here. Looks like a different cycle, looks like something that was made by the bears on purpose to build some sort of the potential top and the base for the top, and now they are trying to move lower. Of course, those levels here that are between 151 and 90, 152 and 153.89. So this is roughly around, let's say, 100 200 pips, 190 200 pips zone here, because those levels here, especially the lows of the previous correction 151.48 are the most important ones. Now the momentum went from the extremely overbought towards the levels of the negative levels. So those negative divergence were finally resolved. The momentum is moving lower. The market moved like almost 200 pips lower as well from the extreme high. So it doesn't actually look bad. It doesn't actually look bad for the bears. They are still trying to push the prices lower. However, this is still very time consuming behavior, and it needs more time to be done. The overall trend is still up, but it's pretty nice corrective cycle here. The outlook remains bullish as long as some major levels are not violated. For example, 150 and 149.37. Okay, last but not least, let's just take a look at the Bitcoin. The Bitcoin went down to of course to retest the trend line. So you can see that we almost hit this trend line here. We got the Fibonacci. That's the first thing. The second thing is that we have the Fibonacci, and we retrace way more than 61%. The market tried to rally after it retraced 31%, but it was immediately put down right? So that's not good at all. That's not good at all. The bears are now controlling the market because they faded the nice strong substantial bounce from the 31 from the 61% Fibonacci retracement, made a new low way below the $70,000 level, 67,457, and now the market is trying to move up again from the negative divergence zone, right? So all of these levels now will act as the technical resistance. We need to change them a little bit, just a little bit, because we got the newest information here on the chart. So the technical resistance would be somewhere around 71,452. That's the previous high, that's the all-time high, so we don't actually need to move it. This one stays at the same level, 69,991, so that's okay. I'm not quite sure how about this one. It looks like the 61% previously worked, so let me just leave it for a while right now. And there is a very dangerous gap here between this technical, well, now it's a resistance 68,869, and this level here, which is very, very close to the wave C low, 66,415. So covering this area here would extend this movement to the downside, to the extremely oversold conditions, and we will go back to the way almost where it started. So all of this movement to the upside was wasted in terms of the bulls, because we just returned where it was, and that's not very good. So any breakout below 66,000 would be very, very carefully watch for the potential top, mid-term top or top on the Bitcoin, very, very close to the all-time high here at 73,660. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.